Hey traders, how's it going? Welcome to this week's wrap-up video. I'm just about to start it off with the S&P 500, which is just basically from a technical perspective. There's no real news that we were concerned about. As we can see here, it's been a bit of a sell-off since the start of October, and what we've seen is the first bounce, which then followed by another bounce after another low, which was just happened to be on a support area. So an area of real interest for buyers. We then popped higher, didn't break this, which is not a bad thing. Pulled back and made a higher low, which was interesting. And we have been monitoring this for a potential right shoulder. Now, if you're familiar with head and shoulder patterns and inverse head and shoulder patterns like this, you'll know roughly what can happen next. Now, if we were to look at this with a measured move, we can see that the potential move for this is roughly up here if the pattern plays out. Now, if the pattern doesn't play out, of course, we can head lower, retest it again as either support or break through it and come back up as testing as resistance. Another option is, yes, we continue higher, head up to this area. If we break through this very nicely, we could then obviously head higher to the area of what we're looking at. Now, it's not something really you want to focus on too much. It's just, if you were to look at it, yeah, it's good for the markets. It's sort of a bit more positive, gives a bit more of a positive tone heading into the end of November, start of December, where we usually see a thing called like a Santa rally, where these sort of markets after October tend to sort of rally into the end of the year. And that's when people start to get involved. So it's quite an interesting time of year if that actually turns out to be the same thing this year. If not, well, we'll just have to work around it. And it just gives us more trading opportunities. Now, if we were to look at the VIX, for example, it's been a little bit elevated for a while. Looks like it's starting to fade again. We could start to head back into the low teens, so like 14, 13 sort of area, if the S&P really starts to pick up. And if we were to look at another market, which is Bitcoin, as we can see here, the volatility really picked up over the past week. And this is due to Bitcoin Cash itself having a hard fork. So Bitcoin Cash is a hard fork of Bitcoin. And as you can see here, Bitcoin Cash is no longer listed on Bitfinex, I think. It's thrown up a lot of uncertainty within the crypto space, because back in the good old days, Bitcoin was the thing for people to be buying. But now, because there's been so many hard forks, it sort of dilutes the purpose of it, if you know what I mean. So we started off with Bitcoin, now we have Bitcoin Cash, Bitcoin Gold, Bitcoin Diamond. You start to see a theme here of there's far too many of these things occurring, and there's just far too much. It's almost like a war between all the developers, and nobody likes that sort of stuff. Nobody wants to be interested. No one wants to invest their capital into something that isn't steady. So that's why you see downward volatility, and it's very, very possible and highly likely that we see new lows. We could see easily 5k being retested. I wouldn't put it past to see 3,000 before any type of up move over the longer term is to be sustained. It's not far off what we've seen in the past anyway, with the likes of this move back in 2014, and we've seen something very similar in 2013. So it's not new, it's just one of those things that are happening again. We could see, this is kind of what it looks like here. We could bounce around and head lower and then start to trend a little bit higher. And from there, we could basically start to see this happen again. Will we hit massively new highs? Who knows? It's not really one that I care about too much. I'm not really a fan of Bitcoin as such. It was just like the vehicle to get the whole sector moving. I'm more interested in other cryptos which have actual use cases. So they're the ones I'm going to be focusing on a lot more going forward. Now, to wrap it up a little bit, there's one stock which we've seen which was PG&E, and the ticker is PCG. If we have a look at that in a second, it seems that they have disclosed an electrical incident just before the California wildfires that we've been seeing recently. Now, if this is the company that was responsible for it, that's not really a great thing, is it? Now, we'll show you the chart in just a second as to how shareholders have reacted to this. And the likes of these sort of headlines, like PG&E could go bankrupt as a result of the California wildfire. These headlines really start to panic people. And if we were to look at the chart here, we can see basically, as that news started to leak out, price just went from roughly 49 to 17. That's a monster move. That's a 70% move, 60-70% move to the downside this week alone. So you can see the share amount here, which is again colossal. 100 million shares traded in one day. That's a lot of capital being shifted about. Now, there is opportunities I'm seeing here on the intradays, but I need to then check on Monday as to whether those fit my criteria or not. If they do, I might look for a short-term opportunity. But again, I'm going to be very, very careful here, because this thing could turn really sour really fast once again. So that's pretty much it for this week, and hope you enjoyed this, and we'll see you in the next one. Thanks.